Welcome to our Diagonals and Long Verticals webcast. I'm Connie Hill. Happy you join me here today. We get together on Thursdays and discuss only these two strategies so you can get really familiar with them, see what kind of rules we might be using with them, and actually make decisions. Which one might I want to do, a long vertical or a diagonal? So we always have a lot of example trades going on. We're going to be following up on several of those today. I am joined in the chat by Barb Armstrong. I'm glad Barb is here. She's a great coach and also a great friend. Now, what I encourage you to do is you have questions, just type them into the chat. And I'll keep my eye on the chat. Barb will keep her eye on it as well. And if there are questions that maybe I can't quite get to, Barb will help out with those questions. But we want to hear from you. So go ahead, chat in. You guys are always so friendly with each other. Appreciate seeing some of you steady eddies week after week. Some of you are just having some fun banter this morning. Wacky Whack and Kevin and Melissa were having a good time here. Welcome to all of you. Scott, Sharon, Jay Richardson, Will. Happy to see all of you here. Well, let's go through our disclosures and we'll take a look at our agenda. Before I jump to those, I want to remind you that both Barb and I are on X and do posting throughout the week. So Barb Armstrong CS, Connie Hill CS, and you can get, those little nuggets. It's free. It's easy to do, and you're not obligated in any way. All right. So just as it makes sense for you. All right. Let's go through these disclosures. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes. Don't consider it a recommendation. We're going to be using the Paper Money software application, which is for educational purposes. It's a fantastic learning tool. There are some differences between the Paper Money and a live account. One thing that Paper Money does not mimic, and this is very impactful in our particular class of the strategies we trade, is it does not assign options early. So in the event we have a position that could possibly have been assigned early, I'll point those out to you so that you become aware and not just immune to, maybe you never get assigned, because the live market can assign early. When we talk about probabilities, keep in mind they are theoretical in nature. Past performance of any security or strategy does not guarantee future results or success. All right, we'll have just a quick announcement here and talk just a little bit about theory of diagonals and long verticals and maybe some of the differences. Then we're going to be constantly looking at our current trades, monitoring those, talking about how the impact of price, time, and volatility impacts that particular trade, and have several new examples I'd like to get on our books today. All right, quick announcement is the upcoming workshops that we have this weekend's Denver. If somebody is going to be in Denver, you're going to be able to see Kevin and Ben there. Dallas will be April 10th and 11th. That'll be an advanced workshop for those of you that are feeling pretty comfortable with your regular strategies. Then maybe heading to the advanced options, you can kind of scale up your trades you're comfortable with. And then Boston, which we haven't been to Boston for quite a while, so excited for you folks that are near that area. 17th and 18th of April, so coming up here in less like 4 weeks from now, maybe 3 weeks. Yeah, lost track of time. In any case, be aware of those. If you don't know how to sign up for them, just go over to our Schwab page, log in, go to where you see our calendar for our events, and then there's one there for the live events, and you can select there, and you'll see the whole layout for the whole year. Okay, so I would say maybe make a goal to pick one of those sometime this year that will be convenient for you to get to and appropriate. I don't want to say you won't regret it, but I really don't think you'll regret it. People just love those time after time. All right. Talking about directional option considerations here. And usually there's 3 things that we're really focusing on, right? Price, what is the price of the stock doing? Time, is time working for us or against us? Now, in both strategies, we have both a long leg and a short leg. And so to some extent, the time decay is offset a little bit because, for example, if we've sold an option, well, we have a long option that counters that. So sometimes it just kind of changes the buffer room that we have a little bit. Okay. And then volatility. Typically we'll say, options that are long will benefit from implied volatility going up. But we also have to remember that if implied volatility is going up, why is that? Is there concern, right? If we have implied volatility going up on a long call diagonal or long call vertical, we want to recognize how that might impact it. All right, let's jump over to Thinkorswim. And we are going to give you an update here. Some of you are looking for updates on these diagonals that we have been doing week after week. Yeah, we've been like some of these trades you're going to see, those of you that are a little bit newer, we've been working on for a long time, and that's kind of the nature of those trades. What have we got going on in the markets? Well, this is more of a 2-year look, and so you can see the big run, the dip back in last March and April is when this big dip came on. Running up again, nice big long run, and then weakness setting in again. We're not to April yet, but we can already see kind of the major support levels that are being broken here. Interesting, this 6,500 level, which is kind of where this gray square is, was support for a long time, and it's interesting that that's back where the markets are right now. In fact, if we took this and said activate drawing, and I'll try to do this straight, we could extend that support range over there and would say, oh wow, that is at a longer term support area. Is it going to hold? Is it going to drop through? If it drops through, where do we think it might go? And we will want to use our support and resistance and go back to previous times to see where the market has had those points. I tell you, the 6,500 was really a key area you can see throughout here. So it'll just be interesting to see, does the market rebound from here or not? Markets are down a little bit so far. And where do you think the VIX is? VIX back to 26 plus. So it's not as high as it has been here and where it was in the past when we had these major sell-offs, but it's still in an elevated range. Okay, so what does that implicate for what we're doing? Well, so there's a little bit more concern in the marketplace. If the market's pulling back, yeah, that does give us concern because typically we are we're paying attention to that volatility level, and we're long when the volatility is lower. And so if it keeps creeping up, you might be seeing some of your long positions struggling a little bit. Yeah, that very well could be the case. Let's just look at the NDX real quick. And it's kind of in a similar boat where it's down here. I should probably draw this in from here, basically hitting that price support level in this area. So it too is at a significant support area. We're going to see what happens. Does it bounce up? Or if it breaks through, how far might it drop? And we'd be coming out to here, I would say. Let's even draw it in. Back a while ago, where was that support? Yeah, 22,990, so about the 2,300 area is where it had some support in the past. So that would be a significant drop. Okay, how many of you have changed over maybe your short-term strategies to looking more bearishly than bullishly? That kind of happened with some of you. We're going to kind of move that direction with a lot of our trades here today, simply because, yeah, that's the overall direction, and we want to follow the trend till the end. It's our friend, right? I think I did that out of sequence, but that could be the case. All right. Hey, I have to say one thing. I appreciate Barb filling in for me last week, doing a fantastic job with this class. So I hope you picked up some ideas from Barb. Well, every coach looks at the market a little bit differently and trades a little bit differently. And so I think it's really helpful for you to be exposed to different coaches. So appreciate you doing that, Barb. All right. Tommy says this is chipped market, not good for longs or diagonal option trades for the upside. Yeah, you're probably feeling that going long is not been as beneficial to your positions as maybe in the past. Well, let's take a look at a couple of our trades that finished up since we have been together. Let me just maybe come over here to 6 months. And let's look at a disappointing one. We'll look at it first. Microchip technology. You could see kind of was in a little bit of some weakness here. Let me show you what happened. We got in, I zoomed in maybe a little too far here. We got in this trade just as it was bouncing down off resistance, right? It had a little run up and then a bounce down. We got in here. And since we got in, it went up a little bit, it went sideways a little bit. It just was kind of meandering around. Now, I went in and I put in an OCO order on this. And I said, if we hit a target of, we'll go see here, if we hit a profit target of $2, get us out of the trade. We got in for 125. So we were looking to get out possibly at $2 with a $2.50 wide spread. Or if it went down to about 70 cents, then we wanted to be stopped out. And that's the one that filled on us. Okay. So that happens with trading, right? You're not going to win every trade, but we do want to limit our losses when we do have to take a loss. And so, it did what we needed it to do. If we were to say, well, what other trade might have worked better? Now, could it be possible that a put diagonal may have been a little bit better? It might have been in this case, because with diagonals, we're not usually needing as big of a move. In fact, we're looking for smaller moves. And so maybe the diagonal might have been better there. We didn't trade both of them, so we don't know. All right. Now let's take a look at one of our long verticals. This is a long call vertical. Oil and energy is still going pretty strong here. Here's EOG. And on this, we got in right after this nice little bump up. And that's been since March 5th. So we've been in this one for a little bit. And we just saw what it did. Just kept following the trend, kept bouncing off this 10-period moving average. That's what the green line is. Just kind of kept going on, doing its thing until it finally hit our profit target. That was on Tuesday of this week. And so we ended up pretty good on this trade. 240 is what we initially got in for. We said we'd be pretty happy if we could make $4 out of it, 398. And then that morning we did get filled at 405. All right, so great. We did have one that worked out our direction. We did the math here real quick. Let's pull up the calculator. I'll just bring it over on this screen. And let's just see on this one. 405 is what we brought in, and we'll minus 240, which was our net debit. So about $1.65 or $165 per contract profit. And we had 8 contracts there, so multiply that by 100, so about $13.20 on that trade. So we can feel good about that, and it would be ideal to just have some consistency with those types of trades. Now, oil and energy seem to be the trades that are continuing to do well. So if you're bullish maybe in a couple of areas of the market that are experiencing bullishness, then you might not necessarily run into issues, right? Like you are maybe with some technology stocks or other sector stocks. Let's see here. Looking what Tommy's, Will and Tommy are going back and forth. Okay, I think that isn't for me. Yeah, Tommy says maybe a calendar might have been better on our MCHP. Yeah, something looking for implied volatility to go up longer term would be helpful to a long diagonal or a calendar. Yeah. All right. I think this is IROAR. You're just going to wait until they open this straight, see if things normalize here in our markets as they're getting selling off. Yeah. Or take advantage where there is opportunity. All right. So that's what happened on those 2 completed trades. Now, there's some that are just still a work in progress. All right, so let's start at the top here. Let's start with Akamai. Now, Akamai is a nice long call diagonal that we have been in for a while. You can see this is a May option. We got into this trade on January 22nd. So when I say some of these trades have been going on for a long time, they have. So we've got our long leg, further dated. We still have some time on that. We still have about 50 days. That long call has gone from a price of 1060 initially. It's now up to 2660 because Akamai has continued to grow up, follow the trend up. And we have had several, well, this is our third call that we've sold against that longer call in this diagonal. Right now, it is more expensive than what we sold it for. Now, it's not quite yet in the money. This is 120, and I believe Akamai is just as nose below 120. Okay, yeah, got up to 121 now. It's been kind of pulling back here. So what we should see is maybe now, if it continues to pull back, that will help our short put. Okay, so that it could go up in value. Then hopefully, oops, I did the wrong thing. We really just want to be there. Now, in here we have 22 days because this only has monthly expirations. It doesn't have weeklies. Okay, so basically, we're just going to leave it alone and let it work. That's why. Now, some of these others have weekly options available, and so we have more opportunities to sell against them. Let's take a look at AMD. Now, AMD, we still have a little bit of time on this long put, and it's down in value. Okay. Here is our option. We're short here, the 197.50 for March that we rolled to last week. We brought in 490. It's down to 41. Earlier today, it was about 20 something cents. So it's in really good shape in terms of we've been able to collect a decent majority of 490. Now, in our class, typically what we're going to do is we're going to roll on our class day, Thursday. Usually what we're doing is we're rolling to the next Friday, and then we can look at it. If no action's been taken against it, we can make action on it on Thursday. Now, some people, if they wanted to, they could, let this try to dwindle away a little bit more. However, in our class, we're going to roll it. We don't want to necessarily, we want to continue to perpetuate the trade. We're not so interested in milking every little last penny out of the 490. And even where it is right there, we probably have, 90% of it. So you think, well, is it worth risking 90% of what we already have to gain just a few more pennies? All right. And so then you kind of weigh that and go, yeah, maybe it's not really worth it to try to milk it as much. So it's done a good job for us. We have 90%. So let's look at the chart on AMD. And in your mind, what I want you to be thinking of is, okay, what should we be rolling to now? What would we feel comfortable rolling to now? And what did I tell you this was? This is the 220? This one is this is the 197.50. Okay, this is when we rolled it the last time. I decided I would start marking those days, so that's when we rolled it the last time. Pulling back here right now. Where do we think the stock could stay above? Because this is a put. All right, so where do we think the stock could stay above? Right now it's at 207. Maybe we'd come out here. What I was thinking of initially on this one was maybe to roll to the possibly, it's moved around a little bit since this morning. Initially, I was thinking a little bit higher. We may need to drop it down here, maybe to around 200, 205. Some of you might feel comfortable with. We want a little bit more room, maybe to the 200. Okay, so as we come over here to our option chain, our 200, there's some decent cash to be made on it, right? And so the more aggressive you want to be, you might sell closer to at the money. The more conservative you might want to be, you might sell a little bit more out of the money. Okay. There might be some of you that are like, I want to sell way out of the money, and you could. Okay. Just depends on how aggressive or conservative you want, and also knowing we're going to roll this in a week. We're in fast time decay mode here. And so, we're just trying to balance that. Okay. Oh, did I say put on Akamai? Yeah, it's a call. Akamai is a call. If I said that wrong, I apologize, because a lot of what we have are puts. So if I told you wrong on Akamai, yeah, it really is a call. Thank you, CB. So back here, let's do it. Let's roll to the 200. Okay, how do we physically do that? Put our mouse right on this strike price, do a right mouse click. We're not going to create a closing order. We're going to create a rolling order. And really all a rolling order is it's going to terminate our initial short position here, and then it's going to sell a different one. Okay. So we can see our 197.50 for March 27. We're going to go buy that back, and then it's going to sell something else. And it doesn't know what we want to sell. We are going to go to the next week, the April 2s. It didn't know that, but we could change it. Okay. But let's go ahead. Let's change our strike price here. What you might feel comfortable with might be different than what we're going to do here in our class account. So just kind of keep that in mind. And we're looking at bringing in a 332 credit on the net of those. Okay, we're going to hit confirm and send, and we're going to let that activity take place. And we're going to just count on some time decay happening for us. All right. Now, let's see. It's dropped a little bit. We'll give it a little bit of time to work here. All right. NVIDIA. Now, this little guy, it's also a put. We have the long leg out in April, so we still have some opportunity to sell against it, but we're kind of getting into a time frame where it's gone on for a little bit of time, that maybe we might want to just roll the entire position if we like doing it. Okay. Let's see where this is. We sold this for we bought it for 690. It's depreciated a little bit, so we're not ahead on that part of the trade. We brought in 296 when we rolled it. Now it's 590. Now this is an example of something that is in the money right now. Okay. In a live market account, could we have possibly been assigned? Yes, we could have possibly been assigned. Are we guaranteed to have been assigned? No. But there's always the possibility. Even from the moment that you sell the option, you have that potential obligation. It's just not as likely to happen unless it's in the money or close to options expiration, which this one is both of. So we definitely want to roll here. Let's go out. Let's look at the chart. Let's maybe see what things look like and where we might want to, where we might feel comfortable selling. Let's give ourselves maybe back out of here just a little bit. So I marked the day that we did our last roll, which was right there. In order for us to profit from the short put here, we would have wanted that short put, or the price of the stock actually, to go up in value so that our short put would have been gaining for us, but the opposite happened. So it helped our longer leg, all right? It helped increase its value, but our shorter leg, it didn't. Well, now it's in a little bit newer spot. It's pretty close to this 170 support area. So we might use that as our consideration to say, well, where maybe should we sell the next leg? We're going to do just one more roll. Okay. And we'll just kind of see what we get out of it. Our hope is that it finds the support here, that it reacts to the support, that the stock then does run up, because that would benefit this new put that we're going to sell. And again, where would you feel comfortable? Would you feel comfortable selling at 175? I can't remember if there's a 172.50. There might be, or a 170, or even further. Okay, you get to decide your comfort level. So there's our long leg. We're going to come up here. Oh, actually, we're going to go to NVIDIA. This requires a little bit more discussion here. NVIDIA actually has Monday, Wednesday, Friday expirations, right? So a little bit more frequent than just weeklies now. This happened this last, I think it was about 3 months ago, maybe 2 months ago, when the fab Magnificent Seven, I should say, they rolled out those additional short options, which to sell option sellers is like so delightful, right? We're so excited about that. All right. Did I say, going back to my previous trade, let me go back and take a look at that. We'll finish this trade then, and I'll go back and check. I might have selected the wrong thing there. So we'll go back and check. All right. So we've got tomorrow. We've got Monday, the 30th, April 1st, one of my favorite holidays to play jokes on family. And then normally this would be April 3rd, Friday. But on April 3rd, it's going to be Good Friday and the market's going to be closed. So what do? Well, they just go, okay, what's the day before when it should expire normally? That's going to be the expiration. So that's why we have 2 days here in a row. Now we're going to choose the April 2nd because we want it to go to that Friday. It's not going to be Friday. This will actually be meeting this day, but that's still the one that we want to roll to. We were talking maybe about doing the 170. There is a 172.50. So some of you might feel comfortable there. Some of you that are more aggressive might say, well, let's get more premium and sell maybe at the money. But we're going to go, let's go with this 170. Okay. So that's what we're going to roll to. So let's get back to our monitor. Let's go create rolling order. And I should mention why it says calendar here is because when we sell an option and buy an option of the same strike, it is a calendar. Now what we're doing here is going to be a diagonal, and it's recognizing that even though it put 180 in here, it doesn't know we want 170. So we're going to go put it up here. So we're buying back our 180. We're selling the 170. We're hoping to, allow that premium to help us out a little bit. This is, let's see, I have the wrong date here. That's March 30th. We need to go to April 2nd. There we go. Now we have the right date there. So selling out of or buying back our short leg for tomorrow and then selling next Thursday. Normally we'd do Friday, but it ends up being Thursday. All right. Any questions on that one? And let me go back here and check on our AMD. So on our AMD, we bought back the short leg here. And then we did sell the April 2nd here for the 200 strikes. So I think we did that right. Is that the one that we were concerned about? CBU said, are we rolling out 1 week or to the next month? On Akamai, because we only had months, we're just letting it work. It's not time to even roll it. We could theoretically roll it, but for our purposes, we're not going to. Oh, okay. We're good. All right. I think we're all clear now. All right. One last one. These diagonals do take more time. I think they take a lot more time to explain and understand. And so I do want to spend the time with you doing that. So on our AMD, it looks like we haven't filled this quite yet. We'll give it a chance. All right. Tesla. Let's see on Tesla. We have the same kind of time frame here. We actually did NVIDIA and Tesla the same day. So, yep, we've got a little bit more time left on it. Now, this is interesting on Tesla. The long leg, it's worth about the same as it was when we got into the trade, which is nice because it's been able to maintain that level. And so we've just been able to sell against it. Next week, next week, we're going to go add up all of these. How many premiums have we sold against the long leg? And we're going to kind of see, my intent is for us to finish up with those trades next week. And we'll really see an accounting of how selling every week, if that's added up to what we would want it to or not. Now, this one right now is what? It's in the money. Theoretically, again, we could have been assigned this option because it is in the money and it's close to expiration. So again, this is another one of these, we really need to roll it. Let's decide where to roll it to. Get over here on Tesla. And I've got a lot of documenting on Tesla because of how many options we continue to sell. And again, last week before I wasn't going to be here on that Wednesday, I went ahead and I rolled the contracts. Interestingly enough, all of them have been very bearish, right? The market's been more bearish. And so, of course, these positions have been a little bit more bearish as well. On this one, running up here, would love for the stock to actually run up a little bit. Where would we feel comfortable selling? It's a 379. Would we feel comfortable at 375, 370, even further down, 365? Right? You get to decide how aggressive or how conservative you want to be, recognizing that we're probably just going to be in this trade for about a week. All right, so we're going to go here. We're going to go to the 375. We're going to give it about $5 of leeway. It's almost at 480 here, so let's give it about $5 of leeway. Let's use this 375. And again, we're going to do the April 2nd contract. So cue it up again. Create rolling order. It's going to say we're going to sell a new option. We're going to change the date here to April 2nd. And we're going to change this to 375. Okay, the system can't read our mind. It doesn't really know. So it just goes and picks sometimes just a little bit away or the same strike price that we're already in. Now, James said, I thought the goal is to roll for a credit. It is, but we were down on it. Yeah. But that would ideally be what we'd like to do, kind of like on our very first trade on AMD. Yeah, we'd got 90% of the value of that one. That's usually what we love to see. Market's not giving us that right now. Okay. Now, if some of you said, this stock here is headed down, that maybe you're not so comfortable in that anymore, but I'm going to say we're going to continue with the trend one more week. And actually, hopefully that long put that we've got sitting there, hopefully that'll perk up in value a little bit more. We're at 1290 and it's at 1320. Just a minute ago, it was identical. Okay, ideally, maybe this longer leg is what's going to kind of buoy up the trade, so to speak. All right, so see how we're deep in the money here. We're underwater. So we might not roll for a credit. Okay, like this, we're going to be receiving a credit. It's going to help offset that. But the net results here, yeah, we'd love to see that as a credit. Right now, it's a debit. So appreciate you asking about that, James. We've got April 2nd. We've got 375. Let's go ahead, confirm and send. Send it on its way. All right. We have spent quite a bit of time on diagonals. And they do, one, I think they're a little heavier maintenance. Two, we plan on being in them. We can plan on being in them a long period of time. And the intent is for all those options that we sell against it, that it basically lowers the net debit, lowers the net debit, lowers the net debit. Okay, that's the idea with it. Like I said, next week, I'm going to pull together some numbers for all these rolls that we've done. We'll review that together. All right. New opportunities. Let me just make sure and see if there are any questions I have missed, because I think we've been catching them as we've been going along there. There's a question here about A. Oh, you guys are talking about your own trade. Okay, never mind. I'm going to skip that. Question here from CB says, could we do the 372.50 on Tesla? Absolutely. If you're a little bit more comfortable, a little bit further out of the money, absolutely. Yeah, that's why I keep reiterating, depending on how aggressive or conservative you want to be on the trade, then that's when you choose, well, how far out of the money am I going to go on that strike price that I sell? So absolutely. If you're more comfortable at 372.50, yes, absolutely. If you're 370, then do 370. I am doing kind of recognizing we'll hopefully only be in this trade for one more week. So I don't mind collecting a little bit more if we can here. So, all right. Let's take a look at a couple of other things. We are going to do some new trades. And with what the market is doing, I want you to, I'm going to go back here to, let's go to the NDX. Erase, there we go. Do you think the market is maybe poised to make some big moves or small moves right now? Big moves or small moves? That might help you determine what you might expect as far as, should I go look for a diagonal that maybe we're looking for a small move? Should we go look for maybe something more directional because you think maybe it's going to move longer? Now, part of that also depends on the stock that we're working with. Now, I've got 3 stocks here that I would love if we had time to hit all of them. So, and do some long put verticals. Okay, first one we're going to go to is AppLovin. AppLovin was loving for quite a while, but we can see right now it looked like it was going to start to recover here, didn't it? But then it put in what? A lower high, a lower low, boom, breaking down again here, really breaking through that short-term support level. Right now it's at 395. Next area of support that we can see here is about 357. So that's a little bit of move that the stock could make on that. Now, numerically, because the price of the stock is so high, I mean, today it has already moved. Let's see how much it's already moved today. Its range is already $22.60. Okay, so I'm going to put this one in the category of moves bigger. Now, I'm also going to do this, and I think this is something that I find helpful, is I'm going to pull up a little list here called class, and it's only so I can stick in APP here. And so something that I can, I already had it on the list, something that I can use or you can use to guide you is how much is it moving right now? And so I've got these 2 columns. I've got a 1-month change and a 3-month change. And so over the last month, APP is down 11 something percent. Over the last quarter, it's down 44%. Okay. Now you can decide if you think that's a big move or a small move. Okay. I'm going to classify them as bigger moves. Maybe things in single digits I might consider smaller moves. Okay. Say Citibank here, or Citigroup, down 3% for the month, 6% for 3 months, maybe a little bit lower amount. So in this wise, I'm going to say, let's do a long put vertical on it. Okay. Let's go to the trade tab. Let's see if what I had selected still looks decent. And all right. Many times when you're starting out a long vertical, we're looking to use maybe 20 to 40 days worth of time. And finding a sweet spot in there. Today, we're going to be using the April 17s. They're kind of at the short range of that. That also means we're in fast decay time mode, right? Closer the options get to expiration, the quicker they tend to have that theta decay, which when we're selling legs it's helpful. It gives us a little bit of a buffer. So the stock's at 395. Right now. So let's maybe look at 395 and 390. Let's see if that's the one I was planning to use. And it's actually changed a little bit since I was looking at it. Let's go ahead and let's just say by vertical. And let's look at this for a minute. We do have some decent open interest. All right, so those are open interest. We're only going to be doing a couple of contracts. Actually, we could do about 5 contracts here. Typically, we don't want to risk more than $2,000 per trade. So in this scenario, we are willing to risk $215. That would be our max loss to gain what? 5 minus $215. What's that going to be? That going to be $285? Yeah, risk $215 to make $285. That's I'm going to say an aggressive price target, but if the stock's already moved 20 some dollars today, to have it move about $5 in about 3 weeks probably isn't that big of an ask. Okay, if we were to say, where is the 390? I'm going to put my mouse there. 390 is about right where it is. Okay, so for this stock, for the moves it's making, it's not numerically, it's kind of like, oh, that's hardly nothing on the graph. That makes sense? So we're going to not load up here. where we can risk $2,000 in any trade. So how many contracts could we do here? So we'll take our 2,000, divide that by 215, which is our max loss. So we could do 9 contracts here. And I think we're okay with the 9 contracts. If you don't feel comfortable with 9 contracts, you would definitely not do 9. You'd do whatever you're comfortable position sizing for. And even like if it's trades that are newer to you or newer strategies to you, you might even position size slower. Like if you're learning a strategy, maybe you just do 1 contract. You're like, let me get my brain straight with 1 contract. Yeah, it's big since volatility is so high. Yeah. Can I show which one use the indicators? Which one use indicators? You know, when you're doing your technical analysis, you can use a lot of different things, right? What I typically do with this class is I'll look at what the trend is that's going on and how big I think the move is. I think most of you probably have, trying to move this, have the calculations for the 1 month and the 3 months. If you don't, I'm going to copy them out here to you real quick. Although I'm not seeing them, I'll put them in my notes. Okay, I'll put them in the show notes when we're done. I'll show you the thing scripts. And remember, they're never guaranteed as to accuracy or timing when we share those with you. Okay, so let's go ahead. We're going to put this trade in and put it in our dynamic diagonals and long verticals. And typically, I do like to put a target exit with these. Let's do this. Let's go do our target exit. First trigger sequential. We're going to be happy. We're going to say in this case, we're going to create an opposite order. We're going to be happy if we get out of 285, what if we get 65% of that? Okay, 2.85 times 0.6 would be $1.71 of that. Add that to our 215. Let's look to get out at 386. Okay, we're just looking at a conservative, not trying to milk it for everything it's worth. All right, there's our good till canceled. All right, let's send this to our long verticals bucket. All right. I have a couple more that I am going to have to do after and show you next week. Okay, we'll look at the charts here real quick. Number 1 is Meta. Meta, oh wow, it's even down a lot further than it was initially. It had broken through support here, and I had set up that, you know, maybe it could drop to this 551. A lot of the move may have already been taking place here. I was hoping to catch it early. However, it might not be as beneficial now as it was when I initially eyed it up this morning. And then another one, which is on a foreign stock, so we want to keep that in mind. Alibaba looks like, you know, it just is making lower lows, lower highs, ran up. It's a nice close below the low of the high day. Now, it does have some short-term support here, but it's just really short-term the last few days. And a longer-term area down here about 117, which is where we would expect it to go. Expect it to probably not bounce here, but just roll through and drop lower. Now, I have no idea if that's what it really is going to do. So I'm going to set up 2 verticals on these. I'm going to start them at the money. So if you do want to do them in your own paper trade account so you can follow along, feel free to do so. Okay. But I'll go ahead and I'll put in the notes as well the strike prices that I've done with those. I'll just put those in the little notes. So once the recording's posted, you can go back, look at it. You can see what strikes we ended up using for the trade that I'll do just as soon as we're finished here. All right, my time is up. So a couple of things. Hope you're following us on our Trader Talks channel because it just makes it so much easier for you to find our content. I wanted to jump out to it real quick, except that I'm not seeing it. So we won't jump out to it real quick. But this is where you can sign up for the workshops. If you want to go to the workshops, come to our coaching, come down to our in-person events. That's where you can find that. Now, Barb and I would love a follow on our X, Barb Armstrong CS, Connie Hill CS. And if this was helpful to you today, feel free to hit the like button. That lets others know that you found this information useful. Rich, somebody's let me know here that APP did not fill yet. And you're right, it did not fill yet. Oh man, that baby moved on us. 386, 350. Okay, we're going to have to change our price here. I'll have to go back and address that one as well. So look for final notes in the show notes, okay? If I end up having to change that strike price, which we are going to because it looks like it moved really fast on us as well. All right, you guys, appreciate your attendance. Barb, thanks so much for helping out in the chat. To each of you, have a great Thursday. Coming up next is going to be Cameron May with dividends paying stocks. So a little bit more conservative approach, more for investors type of thing. This session has been very much for those that are being really active with your accounts, okay? Or that part of your account. All right, you guys, will follow up on these next week. Bye-bye.